So we're going to take a quick look at the currencies, as most of you liked these currency charts that I'm doing, which is really good. Nothing's changed in currencies since Wednesday. Obviously, we expected a move to the top side. I've told you I've got a target in dollar Swiss of 93.33. Now, obviously this is tied in with the S&P, the Dow, and well, not maybe the NAS, but we do have this correlation between the dollar and the stock markets, and thankfully we've gone back to this correlation with the dollar and the currencies. So we await. If the S&P starts to fall, then obviously the currencies will start to rally and the dollar will come under pressure. So what do we see for today? Let's take out that dollar Swiss target of 93.33. What are we looking for in the short term? Well, you can see already we've gone down to 90.26. We've had a low of 90.23. So we are on course, I think, still to rally at the moment, although we are extremely overbought. I see 90.62 as a viable target in the short term. Now, what we do up at this 70% fib, given that we're so overbought, we can come back down to ease that overbought scenario, or we can trade sideways. We've got good support for dollar Swiss at 89.74, all around this area. If you take that high, that's coming in at 90.02. So anywhere between 90.02 and 89.74, I think it's going to present good buying opportunities and the market to continue sideways. These head and shoulder patterns are renowned for their failure. Bless them, they really are. Same as the dollar index, we had one down here. We had the double bottom up and then we puked. So although the core position is wanting to be long of dollar index, of dollar Swiss, you've got to really pick your levels, because if you don't pick your levels of where you want to go in, you could be the wrong side very, very quickly. And at the moment, I don't think it's a good idea to go in and buy dollar Swiss. I think it's too overbought for that. Where would I want to buy it? In the area that I said to you. We do not want to see dollar Swiss back below here. We don't want to see it back below 89.25, because if we go back below 89.25, that would show me that the bull run that I'm expecting isn't going to come to fruition at the moment. The one thing about these patterns, the head and shoulder patterns, that maybe some of you know, maybe some of you don't, is that a return to the neckline is not unexpected. So if we do get down to that 89.20 area, and when I say area, you can go from 89.40 down to 89.20. If we do get down there, then that would be a good opportunity to go in and buy it. We've got the 9-day moving average at 89.48. We've got the 55-day moving average at 89.15. And that's just above the 21-day average, which is at 89.07. So you do have this little bit here that is going to act as really good support. So I would, if long down here, I would start to be wary if we got down below 89.08. That would bother me. And I would be out of my positions. for the moment, watch that 90.26 area. That seems to be holding. Now it is a 70% fib, so which is what I love and adore, obviously. Can it go higher on a non-farm payroll day? There's a saying from Thunderbirds I'll go is anything can happen in the next half an hour, and that is basically true for today. Now we've had a really good week, okay? We run a lot of positions over the weekend, last weekend, and every single one of them did exactly what we thought. So we don't want to lose it all today, really. Non-farm payroll days, you take a gamble, and that really is it, a gamble. And if you believe that the market is going up, then you put in a silly bid, which is what I love to do, put in a silly bid. Back in the old days, you could put a silly bid, silly offer in. And I've got hit on both in the last half hour. So, in the first half an hour. So never say never, because it can happen. Dollar yen. Okay, now we've hit the 200-day moving average, and that came in at 105.61. Our high has been 105.66. You've got this over here, which is at 105.64, and that level there coming in at 105.67. That one coming in at 105.74. So apart from technically, you do have natural resistance up at these higher levels. I'm not sure I can do this when I'm screenshotting, but I'll have a go. I'm gonna take it from this high, just for my own personal, right? We've started to move down lower, so I'm going to take it from here down to here. Okay, so that's when we started to move lower. We'll ignore what happened in March because it was a mess. So we started that move down, and we are above the 38.2. That's coming in at 105.28. We can go back to here, which is 104.82. So although you want to be looking to buy into this, you don't really want to be holding longs if we break down below that 104.82. We don't want that. Okay, so a break below 104.60 I think would send the market scurrying for cover. If you look at the moving averages, apart from the 200-day, you can see that they are all showing bullish tendencies, but we are, like everything else, extremely overbought. Now you're seeing the RSI beginning to turn. Stochastics not so much now. They're converging. You've still got bullish ones ever so slightly, as in the layman's terms that I can give you, the blue line is above the red line. Okay, that's the simple analogy of stochastics. We want the blue line to be below the red line, and that will provoke a move lower. At the moment, we're not seeing that, but we are looking to converge. So I wouldn't personally, at this moment, go into dollar yen. I'm not keen on dollar yen at the best of times, but today I would worry about being long dollar yen. Now, dollar CAD, well, I'll be. It really has done absolutely nada. But what it's done, doing nada, it's actually making a little base. And if you look at this to here, you can see quite clearly we're forming a pennant. Now, pennants and flags are normally continuation charts. I quite like dollar CAD, as you know. I trade it quite often because I'm a loony, same as that market. So where's our upside target on dollar CAD? Remember how we measure things. The measurements we do are very, very simple. People make it so much more complicated than it actually is. All we do is we take that low and that high and we measure the distance. So we've got a 292 point differential. The idea is that if we break this pennant trend line, we go up 292 points. If you want to be absolutely sure, you wait until the 38.2 breaks. Now, if you're going like I will, I'm going to take that high as a break point. And that would give me a target of 13170. Look around, what have we got? 70%, 13159. That's good enough for me, okay? It really is. You can still add those points onto a break above that 38.2 at 128.79. All you do is just add on those 292 points to a break of that area. But remember, the actual proper real measure target would be 131.70. But even so, the market should gravitate towards 131.59. All right. I'll do the Aussie and the Kiwi on a different thing, a different video, because this is now at like 12 minutes and life is too short.